It is the 21st of July. What have we seen this week? A couple of key themes. Rental markets, are they about to peak? Key research firm SQM seems to think so. We're going to demystify some of the key confusing property finance terms. What should you do if you are locked down and you've got a ton of construction work going on around you? Can you do anything? Can you do a lot? I know a couple of the staff at our weekly morning catch-up this morning had some construction going on next door, above them, below them, wherever it was, and her camera kept on glitching and then she just dropped out. So hopefully the floor didn't collapse on her, and let's run through that. Love this question. Where in Australia is it cheaper to pay off a mortgage than to rent? It's a little bit upside down at the moment with the pandemic still running through, but we'll demystify that for you. And then lastly, should you take an offer prior to auction? With that in mind, we will go through it, but obviously you've probably been hearing me as I run through the auction results about what a big percentage, particularly when we're in lockdown conditions, of people that are taking offers prior. So very interesting to see as to whether that pays off or not for everyone. All right, so what did we see last weekend for the auction results? Surprisingly, despite the fact that Sydney rolled into, I think, the third or fourth week of lockdown, Melbourne entered into the first week, which is now being extended out for another week of lockdown. It was still pretty strong. So, we saw over 75%. So I think the national figures, let's have a look, were 76%. Sydney, 77, Melbourne, 76. So pretty good considering. Obviously, you can see Melbourne still had a pretty strong number, just over that 1,000 properties going to auction. Sydney, obviously, significantly down in terms of volumes. We talked about this before. I think a lot of vendors that were having their properties scheduled for auction have either decided to delay it or potentially brought it forward to before the lockdown. So all in all, I think that's a pretty good, strong result. I think, one of the things we've been talking about a lot, and I know particularly here in Melbourne, we've got first-hand experience. We've done this four times before. This is our fifth, is that, other than that long extended lockdown number 2, with these relatively short lockdowns, people just tend to bounce back pretty quickly when things start happening. So expect this momentum to keep going, and I really don't expect to see those figures change much in terms of clearance rates. Perhaps just the volumes drop a little bit, but albeit again, with these kind of results that are being achieved, I think a lot of people will continue to push on. I know we did do in our real estate business a live Zoom auction on Saturday for the property, and I think it sold for $2.5 million. So there's definitely still people that are happy to do it. That's the first time we did it, so it was a good experience, and that obviously worked very well for that vendor. All right, so this is what we call leading indicators. When I went through the auction results with you, they're what's known as a lag indicator. That's as at a point in time, and it's very much what we call backward looking. So anyone that loves to read any self-help comments or quotes and so forth will know that, you've got to stop thinking about the past, you've got to live in the future. And that's what a lead indicator is. It's generally not quite as, specific as a lag indicator. There's about something that has occurred and it's crystal clear, it's factual. A lead indicator is more a sense, a feeling. So, many of you will talk about or have heard people talk about their gut feelings. A lead indicator is along those lines. However, it's based on clear data and it's trying to forecast as to what may happen in the future. All right, so this is the first one that we look at, which is the buyer demand. So this is produced by realestate.com. They are the largest real estate portal here in Australia. They command the market. So this is what they're seeing on their website in terms of what they perceive to be people that are focused, motivated, and actually looking to perhaps take that step and buy a property. So they're taking certain actions on their listings. Not an exact science, but it's a pretty good gauge as to what's going on. If we have a look here at the national figures, you can see the black line is both apartments and freestanding homes. It dropped a little bit over the last week. You can see it's been pretty flat for, probably the last couple of months, a few ups and downs. We're not really sure how to read too much into that. It's probably about 8% below the peak it had this year in sort of circa Feb. Now, albeit I think a lot of that that we were seeing in Feb is what was translated into big dollar sales and volumes over the last month or so. So what does that mean for the next couple of months? Well, it's still pretty high. It's still above its long run average, still significantly above where it was on average in 2019. So I think we can expect to still see continued demand and really, really strong results, albeit we need to get through these lockdowns coming through nationally. For those of you that are brand new, probably the biggest thing that we can read into this graph that we haven't seen historically is that considerably widening gap, and it's remaining wide between the red line, which is apartments and attached housing, and freestanding houses in the blue line. So, traditionally you can see historically they tended to track relatively similar and in line. It's now widening with obviously significantly more demand looking at apartments. Now, you will know that we haven't seen that translate into actual sales. Freestanding homes have still been the sweetheart of the last 6 months, but I think that's slowly going to start to change as those affordability constraints start to kick in and more people realize that that freestanding home is out of their reach. They see what's happening in the market. They don't want to miss out. So they move forward and decide to grab one of these great apartments. All right, what are we seeing in our local state here in Victoria? Much the same, perhaps a little bit more choppy. As I mentioned before, if you didn't miss out, for all our Sydney listeners or anyone in WA, this is lockdown 1, 2, 3, 4, 5, and hence why it's been a little bit choppier. But you can sort of see that we're starting to get that same gap happening as well, albeit probably 6 months behind. Now, those of you that have been listening to us for a while will know that we believe Victoria is probably running about 6 months behind where Sydney and the rest of the country is, obviously because of those additional lockdowns. So we expect to still see continued really, really strong price growth when some of the other states and capital cities start to slow down a little bit. I don't think Melbourne's really hit its straps yet and really pushed through its fastest growth it's going to get. So I think that's what you can probably see in this gap. Otherwise, much the same as I said when we're looking at the national figures. All right, the next one that I want to run through is the exact same index produced by realestate.com. However, this is for rents. So anyone who is an investor out there, this will be very interesting to you, as well as potentially people just at the start of the home ownership journey that are just renting and testing out to start with. This is a very interesting graph to see. Now, I think it's very hard to understand this graph. And I think one of the reasons being is that it's very much a lower commitment that you're making to rent a property. And therefore, perhaps the stats aren't as easy to read through. And people are perhaps more, open to changing more frequently. We could be seeing here, because I think definitely when we look at the national numbers, it's still, albeit down from where its peak was, it's still relatively strong, and we're still seeing it up on the numbers from 2019, which none of us would have really expected, given that the borders are shut, there are no foreign students, there are no events, therefore all of the hospitality industry that happens in and around the inner city, where the bulk of the rental stock is located, pretty much no one's around. So, there are higher vacancies than normal. That will dissipate, we know. So it's really interesting to see that there's still a lot of, activity going on in terms of this rental, index here. I think all I can say, and I know the guys might have more to say about it later, is that when we look here at our local market, we can tell you, being on the ground now with over 3,500 properties that we manage on behalf of people like our listeners today, that we've had a pretty good and strong, solid results in terms of getting people's properties rented over the last 12 to 18 months. But one thing that I will say is that tenants are definitely staying for shorter periods of time. So, those of you that have asked questions before, and I'm sure there'll be more today, it is more now than ever really, really important that if you do have a good tenant, to really look after them and make sure that, if you can keep them for that longer period of time, and they're a good tenant, then really do what you can to save them. All right, so that's it in terms of a wrap of what happened last week and where the market stats are looking to us. Now, just before we get into the question section, the meat of today's session, I want to ask everyone a question first up. So I want to know, what is more important? Is it information or knowledge? So particularly for those of you that are joining us for the first time, is it information or knowledge that you believe is more important? Just think about that for a moment. I'll give you a couple of seconds to think about it. Don't cheat. Cheat if you want, I guess. I've been watching my kids at Zoom school, and it'd be fair to say that when they're doing the spelling words or maths tests, and then they're marking it themselves, that I've seen my youngest daughter particularly happy to rub out one of her answers and write the right one in and tell me she got 100%. I don't think that that's a sustainable practice, but was interesting to see. All right, so Lucas, give everyone the answer, please.
Knowledge.
All right, good man. So obviously knowledge is more important than information. Now, why do I say that? First, let me just unpack and explain to you as to what each of those words mean and why we say that. So information in itself is just organized data about something. Knowledge, on the other hand, is an understanding about something, either through education or through experience. So, if you think about that, it's not information in itself which is important. It's being able to have the knowledge to understand, interpret, and then apply that information to your personal circumstances. And that process in itself is so, so important for everyone out there. And that's what we call actionable knowledge. So I'm just going to say that again for those of you that might have missed that and didn't realize how important it is. Actionable knowledge is the ability to read information, process that information, understand it, know what it means, and apply that to your personal circumstances. That is such a key thing. And, that is one of the best skills that you can ever have, because there is a ton of information out there, and there is a ton of crappy information, made up stuff, fake news, whatever you want to call it. There is also a ton of great information, and you need to have the skills and the ability to sort through all of that information and understand what it means through that education or experience. Or guess what? The easiest way to do it is joining us today, which is why I think so many of you are on the call today, and we'll help you dispel any of those myths and understand what it means. And then you need to take that next step and apply it to your personal circumstances, so you know what you should be doing when you see these indicators happening in the market, or based on what is going on in the market. Whether that be, should you be upgrading? Should you be sitting still? Should you be refinancing? Should you be looking to get a higher rent? Should you be selling? Whatever it is, you need to be able to have the systems and the processes in place to be able to get through all that information, wade through it, push to the side what is irrelevant, and find out what it means for you. Now, if you're thinking that's all too much and you're not quite sure as to how to do that, we do love to help you in this process. So I will, at the end of today's session or towards the end, put up a way that we can help and we can work together with you. So please do hang around, and I will put that up. And that's definitely one of the fastest and easiest ways that we can help you move forward. And it's a really, really minimal time commitment, and we'd love to be able to be a part of your journey with you. All right, so that is enough. Let's get stuck into it. Those of you who didn't catch at the start, my name is James Maitland. I'm the general manager here at Salvo. I've helped create more than 11,500 homes for people just like you on the call today. I love doing this. This is my passion. Albeit I'd like to be in the office and I'd like to be able to meet with everyone face to face. We still love doing this session, however it is. On the panel, I'm joined by three great guys: Greg Arbeck, Jack Gian, and Lucas Karras. So these guys will be answering all of your questions. I'll be hosting and moderating. So looking forward to getting stuck into this next section of today's session. Just a couple of quick bits of housekeeping. Those of you that haven't done this before, really, really simple to get involved. You've got two choices. You can either raise your hand if you're feeling confident, and we'll unmute you and you can ask those questions live, or alternatively, jump in the Q&A, type out your question. I'll go through those. I can already see there's about 48, 49 still going up. Questions already in there, so I'll be reading through those and posing them to the guys to get stuck into. All right, let's get stuck into it. I will stop sharing my screen. Not sure how to find my mouse. Doesn't appear to be working. Bear with me. All right, that looks like I am back. All right, so let's start off. Before I get into reading those questions, I loved one of those topics because we've talked about this a lot, perhaps in the reverse, about regional property markets going gangbusters. Everyone should be in regional. Who wants to live in the cities anymore? Personally, I believe it's total rubbish. But hey, don't let the truth get in the way of a good story. People do need to grab headlines. So, Greg, you were telling me just before in terms of, the rental markets in particular in regional areas, they're looking like they're about to peak and the tide might be turning.
Absolutely. They've it's sort of research that people are actually doing is that we think we've seen the top of that market. And in contra to that, we're actually seeing a rise in people moving back to the city. So definitely there would appear that I think people have had a go out there and realizing that it's maybe not as great as they thought it might be. So it looks like that the regional side of things has peaked. And I think we're going to start seeing, a lot that it's not going to be screaming ahead further than what it is at the moment.
Okay. What are some of the reasons why, we could look just from a market point of view out in regional Australia? What are some of the other reasons why perhaps they might have hit their peak?
Well, it's affordability. Originally people, the first lockdown, it's all exciting. They rush out there. This is really good. The rentals are cheap. Now suddenly we're on number 5 and we're a bit depressed and the rentals are crazy. So and people go, well, what the hell am I doing? Let's rather, let's start looking at affordable. It's unaffordable, and people are looking. They're going, hang on, let's look at the availability of something that's a bit more convenient.
Yeah. So I think we've all seen these TV shows about sea change, tree change, and I guess what you're saying, Greg, is that the idea is you're going to go and have perhaps a slower paced life. Everything's going to be cheaper. You can work less. For me, I can be surfing every day, all day. But what you're actually telling me is I've got to work twice as hard because the rent's even more expensive.
It's now the rents have become unaffordable, and it's just, and the guys are going, well, hang on, maybe it's not as great as we think. However, what's also quite interesting, when we look at the vacancy rates of our capital cities, they've reduced dramatically since the first lockdown. So if you look at, for instance, Sydney was 6 point, as you say, who cares about Sydney anyway? But we used to be at 6.2%. They're down at 6.3%. So that's like a 10% reduction, up. And Melbourne itself was up at nearly 11%. So inner city Melbourne is about 6% now. So there's definitely seems to be the shift where people are going, hey, this is great, but now it's bloody expensive. It's unaffordable. It's inconvenient. Maybe we should be considering getting back to where the people are.
Yeah. I mean, I think it's perhaps even we're seeing that sort of seesaw effect where, as the regional rental prices are going up, the inner city prices and metro Melbourne prices have gone down, that people are really realizing, hang on a second, before it used to be like this, I've gone for the cheaper rent, the lifestyle, but prices skyrocketed. I'm working twice as long. I now don't see all my work colleagues and friends, and, I'm getting called back into the office. Perhaps not in the last month, but prior to that, and the commuting was a killer. But now it's sort of, hopefully, I guess we might start to see those balance out a little bit as things move back to normal.
And when you say that as well, James, it's just when they got the actual stats are showing that rentals for houses have gone up 1.8%, and in units 1.7%. So slowly, but that balance is coming back.
Yeah. Okay. Good. All right. I've seen a question here, which had caught my attention. We don't normally get into quite personal questions, but given today we're at home, you're all inside our home, so it is a little bit more personal than normal. Someone here is talking about having, I believe they must be meaning termites. They're saying that there's bugs from their neighbour's apartment that have been coming through to their apartment, and the neighbour is now, I think, he said destructing the apartment. I'm assuming that they're renovating and doing some construction work in there. So, Jeremy, I apologise if I've got this wrong, but and I don't mean to laugh because I'm sure this is not an enjoyable situation for you, and hopefully you get through. But it brings me to that question that we've been talking about a lot. Those of you that don't know, we obviously do a lot of construction work ourselves, so we are guilty of renovating apartments, helping those of you that are buyers to renovate, change, upgrade, whatever it is. What can people sort of do, or if you do get caught up with neighbours doing renovations, whether it be in a freestanding house, or perhaps if we want to focus just on strata property with attached housing, what can you actually do? What happens?
Well, James, I think first of all, like you said, some of those things we can't avoid. So sometimes renovations or works do have to take place. And first of all, if you're a tenant, the first thing you should do is speak with your property manager and raise the issue, because maybe they're unaware of it, something happening. And in most cases, you would ask if it's something that's not happening once or for a few hours. If it's going to be something that's going to be happening over a few days, you can always ask for the landlord to give a reduction in the rent to sort of compensate for the interruption that you will be subjected to for that period. If you're an owner, as an owner, you have a lot more power when it comes to a lot more rights when it comes to dealing with the strata. So as an owner, whether you live in the property or whether it's an investment property, you can raise the issue with the strata, and you can sort of suggest things like, if you're going to do some drilling or something that's really noisy, can we do it certain times of the day? Or even ask them to do it on certain days of the week, so it's not continuously happening throughout.
Yeah, good advice. Look, and I know, we've had a case literally just last week or the week before in a building where we manage a number of properties, and unfortunately, one of the residents had a small incident. Who knows how they managed to set their mattress on fire. Being a good building, well maintained, sprinklers went off and dealt with it. No one was harmed or hurt, which is obviously great news from that perspective. But you can imagine that amount of deluge of water coming from those sprinklers to do it, and that's just trickled down to all those apartments below. These are the kind of safety construction works that had to be done to get in, dry those apartments out. I think in some instances, some of the carpets had to be thrown away because they got so wet. But there's some of the things that you can't help. And really, all you can do is try to, work with those builders, work with the owners corporation to try to do it in such a way that puts minimal stress on you. I know particularly, up until we had this lockdown, one of the ways that we helped those tenants navigate this through this time period was to have the works just occurring during normal working hours as much as they could. So most of them were out of their apartments and at work. Unfortunately now, it becomes a bit of an unmitigated issue because it's very hard when everyone's stuck at home. But, I know it's very much just about talking and getting involved. And I think, like I said at the top of the show, if they are a good tenant, you really, really want to do what you can to look after them, because trust me, a few dollars today will seem like nothing when you're up for vacancy, reletting fees, and potentially, not getting a good tenant to replace them. So it's definitely worth doing what you can to make a good tenant happy. All right, let's skip forward. I can see there's been a few people that have just said hi, great. There seems to be a lot of first home buyers as well on the line. So welcome, guys. Appreciate you joining us. We often do love to talk to first-time buyers. Perhaps there seems to be a lot of questions here in terms of, getting home loans and so forth. So maybe one of the best things, I think we put it in last weekend's newsletter, was about some of the key finance terms. Perhaps can someone run through, give us the top 5, key sort of jargon that people use in the finance industry. So those people that have joined us as the first home buyers can have a bit of a better understanding and perhaps even impress their friends at the next barbecue in 2023 when we're allowed out. Hey, Greg?
Yes.
Yes, James. I think I love to share in the financial terms when you're doing the home loan, and which is very common. But also it's very confused, and sometimes it's very hard to understand especially for the first homeowner. They apply the home loan mortgage, and I think the first term is a cash rate. So the cash rate actually it's nothing about cash, first of all, and it's been set up
all this time. I've been thinking it was all about cash.
It's actually the cash rate is being set up by the Reserve Bank of Australia. So to put a simple way, the cash rate is actually the basis for the bank to set up the home loan rate. Every month the Reserve Bank they meeting and they set up the cash rate target to either encourage the economic activity or just control the inflation. And if the lower the cash rate, which means we have the lower home loan interest rate. In another way, if you increase the cash rate, which means the home loan rate will be higher. Currently, I think the Reserve Bank setting the historic lower 0.1% of cash rate until 2024, which means we have the lower home loan rate until 2024, which is currently we're having a great opportunity. So basically, that's the cash rate.
So anyone that didn't catch that, Jack gave a very in-depth explanation there. One of the ways that those of you that didn't catch that, I can put it this simple: the cash rate is the Reserve Bank's interest rate. So when you're normally looking at the NAB, Westpac, ANZ, CBA, and their interest rate they're charging you, this is the Reserve Bank's interest rate. Always lower, but that generally is what your bank will use as a reference as to whether they put their rates up and down depending on where that's going.
Yes.
All right, Jack, hit us with a few more.
Yes, few more. The second one is we call it LVR. It's a loan to value ratio. So this is the very, very common words we always say, like LVR is always expressed as a percentage. Basically, this is the size of the loan in proportion to the value of the property. For example, we're always talking about 70%, 80%, how much you can borrow. That is the LVR. So the LVR normally is 80% for the people they borrow their money from the bank. Sometimes if you borrow the higher LVR, such as over 80%, normally there is a condition you need to buy the lender's mortgage insurance. So the lender's mortgage insurance, which is the next one we're gonna talking about, is also we call the LMI. So this is actually the things that will protect the lender from the financial loss if the borrower's defaults on the home loan and there is a shortfall in value after they sell the property. Is that too complicated?
So I think we always have a lot of people confused. That's the bank's insurance policy. Not for you. It doesn't help you at all, albeit you have to pay it. Now you might say, why? Well, unfortunately, you know what they say? He who has the gold makes the rules. And unfortunately, when you need money from the banks, they say, you must pay our insurance policy because we're going to lend you higher than 80%.
Yes.
So yeah, look, it's very complicated. You've rolled us with a few acronyms there: LVR, LMI. What are you going to hit us with? Give us two more.
Yeah. So the next one is home loan pre-approval. I think most of the people understanding this one because we normally call this one is conditional approval. For the buyer, the serious before they going to buy the property normally, and they will have the pre-approval, conditional approval have ready. This is sort of the indication of the amount of the money a specific lender may lend to you. Of course, will according some certain financial situation after the review. But this is the good things for the buyer because they can know what is the borrower limited. Then they will very confident to go into the property market to find the right property or even going to the auction. So another thing we need to mention is before you go into the auction, bidding the property, you have to have your pre-approval because the auction is unconditional. This is not subject to any finance approval.
Okay.
Yeah. So I've got to give you the last one very quick.
All right, give us one more.
Yeah, so offset account, which is a great facility. I think everybody should have it, which is very helpful for the bank account if you have the extra money sitting in your bank, which can deduct your mortgage amount. For example, if you have a 500,000 mortgage payment, but you got a 50,000 in your bank account, in your offset account, you only need to pay the interest rate on 450.
Very good. And I think, one of the things that, and I don't want to generalize here, but let me tell you one of the things, the insights that we get, we run a very large mortgage broking business as part of Salvo as well. And some of the insights that we get and being part of the largest broking network in the country is the difference between men and women. This offset account is fantastic for men. And I'll tell you why, because unbeknownst to me, until I looked at these stats and understood it, women are far better at compartmentalizing money and very good at tending to have multiple bank accounts. And they will say, right, I'm setting that money aside there to pay those bills. This money's here. And then they'll be able to put the balance of the money into the mortgage and reduce it. As men, Lucas would know, we have one bank account because it's hard enough as it is to remember passwords for that, have a key code, know how much money you've got. And so typically what we do, if you're as rich as Lucas, you might be sitting on a stack of cash in your bank account while you've still got the mortgage that you're paying off. So the beauty of that offset account is it allows people like all of us on the screen here, men that are not used to compartmentalizing as well as women, to add the two of them together and just pay interest on the net amount. So, as Jack said, if you had a mortgage of $500,000 and you had $50,000 cash, you could just be paying on the difference being $450,000. So great thing, particularly for all the men out there. Make sure you get an offset account. Generally, they come free or they're a minimal amount. So it's definitely a good thing to do. All right. So I can see, we've gone well over time already, but there's a ton of questions here. So given that I know anyone who's in Melbourne or Sydney will have the time to hang around, we're going to run for another 5 or so minutes and then I'll wrap it up. If you do have to leave now, then I'm sorry that we've gone over time. And I'm sorry that you're busy. Hopefully, you'll join us again next week or next month. We will put up a recording later of today's session. So if you have joined us live, you will be able to catch the last 10 or so minutes. So thank you for joining us. We will continue on. So I'd love for the rest of you can hang around. Okay, I saw a lot of questions coming through when Jack was running through some of those tips, particularly when we were talking about pre-approvals and so forth. So he talked about auctions and so forth, that you must have a pre-approval before you bid. Perhaps can someone explain, particularly given we've got so many first-home buyers joining us today, what are the actual options you have as a vendor when you're choosing to sell your property? And obviously, conversely, for buyers when they're looking to buy, as to how the different vendors might actually be selling that property.
Yeah, James, I've done it a couple of times myself personally as well. So when you're selling, basically the two most popular ways of selling is either by private sale, where you advertise your property at a fixed price, and it's normally a campaign that lasts about 90 days, or you have the auction campaign, which is basically a sort of more intense 5-week campaign. 4 weeks marketing, 5th week is the auction week, where people sell under the hammer.
Okay. And so, if you do choose to go to auction, or the property is going to auction, can people buy that property before the auction date?
100%. So basically, when you have an auction date, it obviously, you already know there's going to be the auction on the 5th week. So until that time, people will come to the open homes, have a look at the property, do the due diligence, get a copy of the contract of sale. And there's many buyers out there that don't like bidding against others at auction. And they do have the right to put in the best offer in writing without any cooling off rights to the vendor.
So for these vendors, if they are going to take an offer before auction, do we have any stats, more recently as to, because I know I've been mentioning a lot over the last, 6 months, how many properties that are going to auction are being sold prior. do we have any stats in terms of whether people are better off, worse off, the same, taking offers before auction as far as vendors go?
They don't come with the stats meant for nothing, James. So, of course I do.
I can see Greg already getting upset with you saying that.
Look, for the first 6 months of 2021, we have seen that those vendors that hold their nerve and they actually sold on auction day made thousands of dollars more. To be more specific, 12 to 14% more than those that sold prior to auction.
Right. So there's some pretty big numbers that I think, you know, when you actually put dollars behind that, if it was a $500,000 property, that's sort of circa 50 grand. So it's big money. What are some of the other benefits, you know, particularly if you're a vendor, you know, you're a seller selling your property, what are some of the other benefits, you know, selling under an auction rather than private sale or taking an offer before?
Look, I mean, obviously selling at the auction day, like I said, you're guaranteed to get the best price logically as you have multiple buyers bidding for your property. And we know that when buyers go to auction, a lot of the times they get caught up in the emotion and they end up stretching the budgets or even making an offer that they can't really afford, is what we agents call paying an emotional price at auction. So obviously benefits going to the auction, you know that it's a shorter campaign. Rather than your 3 months private sale campaign, this is a very short campaign, maximum 5 weeks. So it's a shorter campaign. You are sort of, based on the figures we discussed, guaranteed to get a better price. And if anybody decides to make an offer, they lose their cooling off rights. Because with a private sale, if you do make an offer, you do have 3 days cooling off. You can even put subject to finance. When you're buying or making an offer prior to auction or at auction day, there's no subject to finance and there's no cooling off.
All right, very good. So with that in mind, you know, if you're a buyer, you should be making offers prior to auction because potentially you're going to get a better deal and better contract terms. If you're a vendor, you know, obviously I guess it's property by property and you need that right advice. But as a general thing, you're potentially doing far better taking it all the way through to auction. So, you know, why am I, you know, announcing week after week after week for this year that so many people and such a high percentage of sales are being sold prior to auction? You know, why are these sellers taking these offers then?
Well, it's quite simple, James. As we all are aware that we're currently going through one of the best booms we've had in many, many years. So a lot of those vendors that do not want to go through the stress of auction day, they are getting a very good offer prior to auction, which is what they were originally aiming for to begin with. So therefore they take the offer. So
they're basically not being greedy. They're saying that's what I wanted. I'm happy. Just have the certainty, get it done. Makes perfect sense.
That's right. And on the other side of the scale, there are some buyers out there that have their own pressures of needing to buy a property by a certain time frame. So this also works for them. And also the fact, like we said before, they don't want to be competing against other buyers and pushing the price up either.
Yeah. Okay. Makes good sense. All right. A couple of quick questions before we make some closing comments. We talk about this a lot, and look, the landscape's constantly changing. But I loved seeing that headline that it can be cheaper to buy a property than rent. I never heard that when I was growing up. It was never cheaper to rent, but apparently there is a large proportion of properties out there, apparently, Greg, that are cheaper to rent than buy. Is that true?
In theory.
In theory, right. So here I was getting excited thinking that's it. We can go rent up. I can rent Justin Bieber's mansion for far cheaper than it would cost to buy.
The headline is quite, like you said, it's a bit misleading because it's only certain areas. Australia is a big place. So when they talk about that, it's there's a third of properties are cheaper to rent. We've got to look at where. So if you want to live in the middle of nowhere or places that no one wants to be at, then yes, it could be. But generally speaking, capital cities, Sydney, Melbourne, no. That's not the case.
Okay. So how do they calculate, like when they put these stats out, how exactly do they calculate? Like what's the formula behind it?
Now, what they'll look at is what we talked about, LVRs and stuff like that. So that the value of the property relative to the rent, and we're talking about only the interest, the holding component of the property. So if you bought a property, you look at the interest component of that relative to what you could rent that for in the right location, which could be in the middle of nowhere. the rental one time could be cheaper to buy than to rent. So generally speaking, not.
Okay. So, I mean, I think it'd be fair to say we were just talking before, and I think it was you that was talking about regional rents and CBD rents and so forth, that it'd be fair to say as well that stat is potentially skewed, given that, you've talked about how rents are down, vacancies are up in the inner city areas, that could have been a different calculation maybe 18 months ago.
Absolutely. Because then you got the values in, the regional places have increased. So so the calculation has definitely changed.
All right, but let me put this to you, and maybe we can end with this question.
Yeah.
You told me maybe about 5% of the suburbs in Melbourne are cheaper to buy than rent.
Yeah.
Maybe that could be different, but it's going to be what? Maybe 10%, right? There's not going to be a huge difference. So why do people buy then? Why are people buying if they can rent the same property for cheaper?
Because what we've always been saying is that property is a long-term investment. So that once you get yourself foothold in a property, I've been here. I speak funny, as you can hear, but in the 20 years plus I've been here, we've seen property values double every 10 years. So if you can get people are still buying, knowing that within a certain time frame, they will be doubling their money and doubling their value in property. So it's a very good investment to get get onto.
All right, good. Look, I'm going to have to stop it there. We've gone way over time, and I do want to put forward that offer that I suggested at the start of today's session to help you move forward. So I'll put a pin in there. We will hang around at the end if anyone would like to ask some questions. So let me just share my screen again, and let's just close out the formalities of today's session. Okay, you can see that, Greg?
Yep.
Great. All right. So obviously today was great. We've done a ton of information. We've gone through heaps of questions. And hopefully, even if you didn't ask your own question or I didn't get a chance to answer your question, you created, or we helped create, some knowledge for you today. So, what do I see as the next steps? Everyone says it's great today, and then they go off and go about their daily life. And really, what they do is they do nothing about it. So, you can do that. And a lot of you will do that. That's just reality. But let me just put this to you. If you don't make a change, then don't expect to get any different result. So, if you have got excited about today's session, you said, you know what, I want to upgrade that property. I want to move from renting to buying my first property. I know a lot of first home buyers are on the line today. You might have been looking and looking and looking. It's very hard not to get caught in what we call paralysis analysis, where you're constantly looking, you're never going anywhere, and your budget keeps on getting bigger and bigger. Prices keep getting further and further out. You need to make a change. So at a bare minimum, what I really, really hope you do is take on board what I've said. You understood that concept of actionable knowledge. I went through it at length at the start of the session. If you are watching the recording, go back and have a look through what I talked through. And I hope that you take those concepts, you take those teachings, and you go out there and you apply it yourself. However, what I really hope you do, and this is what I think is the best option for everyone on today's call, is let us help you with it. We do this day in, day out, and we'd love you to be part of the family. So how can we help you? Well, I've thought about this a lot, and there is a ton of ways we can help you. But, you're busy. We're all busy. Everyone's wondering, do I really want to invest the time? What's it going to cost me? What's it? Well, I'll make it simple. It's going to cost you nothing. All I'm asking for is a 15 to 20 minute time commitment from you. And that is the smallest commitment you can possibly make and still have a reasonable prospect of actually getting through, cutting through, and making real progress. So what I've done is I've set aside time in everyone's diaries over the next 5 days to have these 15 to 20-minute catch-ups with you. We obviously can't do them face-to-face for the next 7 or so days. So we'll do them over Zoom. We'll just chat on the phone, FaceTime, however you prefer to do it is easy with us. And, typically what one of these involves is we'll have a bit more chat about the market. You'll tell us a little bit about what you've been up to, what you're hoping to do, where you are. It might be as simple as saying, you know what, I've never bought a property before. I'm renting. I thought I was happy, just wanting to see what's out there. That's fine. It doesn't matter where you are in that journey. That's the point of this, is just to understand where you are, and then really to try and see if you'll be a good fit for us. Now, reality is, we're not going to be able to help everyone. Not everyone is going to be a good fit for us, but really we can get through, work out, and then sort of set up with you what a couple of the next key steps should be. And hopefully we can help you with those next steps. If not, we'll definitely put you in touch with the right people that can. So I know that you'll get value out of this. Now, if you're wondering, is this going to be right for you? Well, it's really, really simple. If you're prepared to do the work, you're confident, you're motivated, and you will roll up your sleeves and take that action, then this is the right step for you. I'm asking you to commit 15 to 20 minutes of your time. It's not a big commitment, but you've got to be prepared to make that commitment so that you can increase that knowledge. You understand what I'm talking about when I say actionable knowledge, and you want to grow that. You've got to be prepared to do the work, as I said, and get involved. So how do you do it? It's really, really simple. There's 3 ways. Jump on now. There's a link in the chat. Click through and you'll be able to book one of those sessions now. They do book out fast, so jump in. It is dedicated time in everyone's diary. Second way is your Zoom, when it launched, your browser would have been redirected to that booking page. I'm sure some of you already saw that and jumped in and booked those before I got to this part of the session. And then lastly, if you've got to go or you're unsure about it, I will send you a follow-up email after today's session with a link that you can jump on and book those. So it's really, really simple. Those of you that are on Facebook, I believe in the comments or the description of the live, there is also that link. We've just updated that now because we've had so many people joining us over Facebook. I'd love to get you on Zoom next time, but Facebook's great. You can also click on that link and book one of those appointments. So that is it. I told you it'd be short and sharp. It was sharp, perhaps not quite as short as always. However, I can still see that pretty much everyone who logged in at the start is still online now. Hopefully we haven't put you to sleep. I very much appreciate all of you giving the last 45 minutes of your time, getting involved, being a participant and taking those actions, asking those questions. That's what makes this session great. This is why we love doing it. We don't do it just for fun. We do it to help you. We love doing this kind of stuff. So, I thank you very much for all of your time. And from me and all the guys on the panel, thank you. And we look forward to hopefully seeing you next week, next month, next quarter, whenever it is. We do this every Wednesday, 2:30 p.m. And we'd love to see you join us again. And we'd love to see you face-to-face or on the phone or Zoom with one of those one-on-one meetings. So thank you, everyone.
Thank you.